Obviously, everyone's very optimistic about the reopening with China. What is your view on how much this could really boost the economy here?
Thanks for having me, and happy 2023. I think the gradual reopening is definitely going to be in an orderly fashion, and I think Hong Kong and also opening up the borders to both mainland and internationally is going to do a great deal. I think first off, about a week ago, there has been a loosening up of policies and the requirements no longer needing close contact quarantine. Travelers, whether it's business or tourists coming into Hong Kong, there's no need to do the PCR tests. So I think that does do quite a lot to help people coming into Hong Kong and through Hong Kong into China, mainland China, to encourage more people to open up. As far as going forward, I think with New Year's coming up, Chinese New Year coming up on the 22nd, I think this is where we see the timing of more policies to open up again. So in the direction of, there's some numbers being thrown around, but I think like I said before, it's just more orderly fashion and based on what we can possibly do, I think, in LegCo, and we try to, as much as we can, try to push for more opening as we recover and come out of this COVID situation. Yeah.
Well, it takes us into some of the urgent questions, right? So what do you think is the most urgent ask or need for the sector, whether or not that has to do with the opening of the border or not?
Yeah. Well, I think the most urgent thing to do is to continue to open up, and I think you see business travelers and tourists coming back into Hong Kong. I think there's towards the end of 2023 we had several large-scale events with the investment summit, and then we had the rugby sevens coming back to Hong Kong. I think it's a continuation of that. So going into 2023, there's, I think, a lot of optimism, quite frankly, for people in the market and financial services. I think towards the end, I think the last trading year, we had 5 IPOs all rushing in at the very end, right? So I think the idea is to, as we open up, this is a very big element. You know, people doing business, and financial services is a service industry, right? You need to talk to your clients, you need to see them face to face. Despite all the online trading and all the things, Zoom meetings you can have, but you can't, you know, you need to look at deals, you need to evaluate companies and talk to management face to face. And I think this is going to be a big theme in 2023 as we continue to open up.
How do you see, financial services? How well positioned do you think they are for this reopening right now? Because there were a lot of people maybe last year that decided, I'm just going to hide out somewhere else for a few weeks, few months to ride this out. Are those personnel coming back here in big waves now? And how difficult is it to kind of lure back those clients back here to the city?
I think there's a lot of momentum. I think 2022, the first half of it was quite tough, honestly. And I think with the 5th wave of the pandemic, people were kind of more looking inwards. But after, 2022 was the 25th year of the establishment of Hong Kong. President Xi Jinping came to Hong Kong, and then with the 20th National Congress happening towards the end of last year, and the new term government in Hong Kong as new term LegCo members, I think there's a very positive vibe to push forward the progress. And the policy address by the chief executive in Hong Kong is also kind of a lot of measures within the financial services space to do more connects. I think this year we'll see the dual counter renminbi dual counter trading coming online. At the end of last year, there was the AML amendment bill, which pushed forward more open kind of a concept, looking at virtual assets service provider licensing regime. So there's a lot of momentum, I think, as whether it's from mainland China, from a macro policy standpoint, and also from Hong Kong, we're trying to drive for 2023 to open up more, and to bring more development opportunities.
Well, let's pick that apart. A couple of things on the Connect. Wealth Connect, a lot of people have been talking about that. I'm still a bit confused, really, at what it does, and what did you tell us in terms of participants? where are people busy, and how are people using it?
Yeah, I think with a lot of these policies, it does represent a very big step towards the under one country, two systems. Hong Kong serving as a gateway into China, and also as for mainland Chinese investors to go overseas, right? So Wealth Connect is a big part of the overall picture to tap into the Greater Bay Area.
Yeah.
And so far, I think with a lot of these kind of policies that kind of open up, it does take time, frankly. So I think what the financial services industry would like to see is that so far is about 20 or so, mostly banks, basically banks, but we would like to see non-bank financial institutions have more product variety, because right now it's just mostly conservative products. So if we can push the policy forward to have more financial institutions, a wide variety of financial institutions, as well as a variety of products, I think this will represent a big opportunity.
And the holdup there would be what? Convincing mainland regulators to allow that wider variety of choices.
I think there's, right. Yeah, I think there's a lot of different angles. Obviously, from a regulation standpoint, you're dealing with different currencies, different legal systems. It is a very big breakthrough to have the Wealth Management Connect being launched, but now it's to increase the depth of this and the breadth of the products.